Well, g'day there, everybody. Thanks a lot for joining me on this Thursday afternoon market recap. I will say that this is going to be a relatively short recap. I am going to leave the larger, more detailed recap for that pro analysis class, which I present each and every Saturday. That goes for 90 minutes. And again, it is in much more detail as to what we quickly have a look at as at the market close, generally most days. Now, this is a chart of, again, the NASDAQ. The NASDAQ definitively still hasn't broken to the upside, nor has it moved below our bearish entry triggers down here at 7,849. This is really collectively across the board. We've got the Dow Jones Industrial Average still pulling back. It is setting up what appears to be that of a bull flag. So the odds at the moment, especially when we take into consideration these rising exponential moving averages and the fact that the markets haven't been able to establish that of a significant or material breakdown, does sort of push up the odds of a continuation to the upside, which would be very much so welcomed, and it would alleviate a lot of the current concerns that we have during this sideways choppy type of market formation. It's really best surmised on the NASDAQ. I'm just very quickly showing you that of the S&P 500 as well. You can see that gap that we established between Friday and Monday. We closed it on Wednesday. Today we have another high wave spinning top, up 8 points on the S&P 500. On the Dow Jones Industrial Average, we closed up 54, but again, largely, we were confined within that of Wednesday's candlestick. So we're not seeing any material movements whatsoever really in any direction. And really the best market, once again, to show you this is that of the NASDAQ. If you pay attention to where we're closing at as at today, if you go back really to essentially the 5th, Wednesday the 5th of September, we really haven't moved anywhere. This accounts for really 3 weeks of trade where the NASDAQ has been essentially stuck in the mud. So it does become a little bit frustrating. I do agree with that. However, we still do not have definitive movements, and that is the big problem right now. So I understand the frustration of traders who are out there saying, well, I just want the market to move one direction or another. I feel that, and so am I waiting for such a time. But at the moment, again, every time we do see that of a bullish pop or a rise in the markets, we are establishing consecutive series of upper wicks, which again does lead to that of supply pressure, or just essentially selling pressure below, of course, the all-time high, which takes us back to the month of August on the NASDAQ. So again, the best move right now in the markets is to remain patient, to really not do all that much until we get confirmation of these markets working in unison. Now, as I say this, although we did see a 51-point print to the upside on the NASDAQ, we didn't break out above that of the high of Wednesday's candlestick. And at the same time, each and every day we move sideways, this upper pushing trend line is getting closer and closer to price action. So unless we see that of a real material bullish pop over the coming sessions, again, if we continue to move sideways, we are essentially going to break down below this rising trend line, and that does become concerning. If you pay attention to this again all the way back to April, this has been a very firm support area. Nothing at the moment is really suggesting that we are going to see an immediate break. It is a very high possibility, however, but again, as long as we just walk this trend line, it does open the door for, of course, the NASDAQ breaking out above 8,137. I am completely neutral on the markets, and that has been our take on these markets for really, pardon me, a number of weeks now, and we haven't really missed out on any opportunity whatsoever. You can see just here that for 3 weeks we've essentially been moving sideways. So again, this does look like some form of a consolidation, and we're just waiting, unfortunately, for the breakout or the breakdown. It doesn't really bother us which direction the market does move. However, we just need to remain patient until it gives us, or at least dictates to us, the direction in which it does want to play out. All right, no skin in the game really at the moment, just sitting back and allowing this market, or giving it enough time until it reveals to us which direction it truly wants to move. Pay attention to this rising trend line, very, very important. And the other market, very quickly I wanted to speak about, pardon me, is that of the Russell, because the Russell, it has been moving into that of a sort of a deeper correction. If I bring up these exponential moving averages, we have actually closed now for 2 sessions below the rising 50-day exponential moving average. It's something that we haven't been able to do in the past. If you pay attention to this, it has been really just one session where we have definitively closed below that rising 50-day exponential moving average. Every time we pull into this area, we generally see a bounce. And at the moment, if I move the chart over, you can see that this is now the second close below this area. What makes this even more important is that if I zoom out to the weekly chart, now this is the weekly up here, it does look a little bit different, but if you pay attention again to that upper bullish trend line, we are getting very close to interacting with this level. You can see on my screen, it's coming in just slightly below where we're currently trading at 1,680, give or take. So again, that definitive moment of truth is approaching, not only on the Russell 2000, but ultimately on the NASDAQ. We're going to have to see a bounce or a push off from current levels relatively soon to really confirm this bullish move, or we're going to see, unfortunately, the breakdown of these bullish trend lines, which is going to open up the door for a relatively sort of sudden and probably rather aggressive bearish retracement that I think a lot of people are simply not factoring in or potentially pricing in the odds of such a move happening. So it's good to be flexible. It's good to remain flexible during these rather frustrating and sort of dull, boring types of market environments that we found ourselves in for longer than what we would have liked, but that's just the reality of trading the financial markets. It's not always trending. It would be good if the markets did continuously trend to the upside. It'd make our jobs a lot more easier, but unfortunately, that's part of me, not the reality that we work in and operate in as technical traders. Now, one other point I wanted to make, pardon me, after market is Tesla. Tesla at the moment is trading down between 10 and 11% as I do this recording. It's down roughly $30. As the SEC brings their lawsuit against Elon Musk. At the moment, it's trading at about 270. So expect a big gap down on Tesla. What you could do is essentially just remove that open trigger. We've been waiting for a move like this to actually set up, not fundamentally driven by the news that has just come out a few hours ago, but more so the technical backdrop. It's funny how these sort of align, or at least they are somewhat parallel to the price action, which has been sort of moving or going about in Tesla on the macro time frame. So it does confirm that of our technical suspicions. I just see how it actually opens on Friday before jumping in, or at least leaving that open trigger on. So, pardon me, we're going to have to monitor this, and as you can pick up, I am a little bit sick at the moment. So sorry for my couple of coughs there. I'm trying not to move into a coughing fit. So I'm going to wrap this up relatively quickly. But pay attention to Tesla. Tesla is getting a little bit clobbered at the moment after hours. We're going to have to see how it does open. We might see a little bit of strengthening moving into Friday's session. But at the moment, it's trading about 270, which is going to be a drag on the NASDAQ. So we'll have to see how this recalibrates, into the NASDAQ. If we do see somewhat of reversals take place on some of these big tech leaders as well. At the moment, none of them have broken to new highs. You can see Apple, again, pushing on back up, but establishing that of a third consecutive lower high compared to where we were at the very beginning of September. If I go into Amazon, yes, we have pushed off from these rising exponential moving averages, but again, still not confirming any of these new all-time highs, which to me at the moment is a false sort of move to the upside as it stands. I am looking for market confirmation, and I wouldn't be jumping into really any of these trades on the upside at the moment until we do have market confirmation. And again, just to show you this is the chart of Google. Again, firming back up above the exponential moving averages, but what's happening is that essentially right now we're retesting a lot of this old support as new resistance, hence the wick just here. So I would be hesitant jumping into a bunch of new bullish positions. Also, I just wanted to point out to you that when it comes to CVX, we've been, pardon me, here comes my cough back. We've been looking at this downward sloping trend line. You can see here, 1, 2, 3, 4. I'm sort of going right to left and left to right. But what we've been establishing is a move back up to about 122. We hit that, interestingly enough, we hit that on Tuesday. And if I could just remove my illustrating sort of drawing pen at the moment, you can see we've actually set up a 3-day reversal pattern. This is what we call an evening star reversal just here. Quite an interesting signal. We still have a little gap between Friday's session last week and Monday this week. But if we do see this linger, roughly around 123 to 122 where it currently is, and we still develop that of potentially dark Morobozu candlestick. Say for instance we gap up, but essentially we trade on back down, or at least we establish up wicks around this pivot up here. It does set the stage for, if I zoom out a little bit further, for another consecutive rollover back down to about 116 at a minimum as well. So think about that on CVX. Outside of that right now, I wouldn't be jumping into a bunch of trades as at the last session being Friday tomorrow. Instead, I would be waiting on my hands again and just waiting for these markets to confirm one another. Again, you can make the argument either way. It really doesn't bother me which market or which direction these markets collectively move in. However, I do want to wait for that confirmation before taking trades in that direction. Really, that's the narrative right now, and it has been the narrative. Summing this all up again on the NASDAQ for the past 3 weeks. I know it's a bit of a struggle, but it's the correct thing. It's the intelligent thing to be doing as at the current juncture. All right, so that's going to do us as at Thursday, everybody. If you have any questions, email me success@pivotpoint-trading.com. Otherwise, I'll see you over the weekend in that pro analysis class. All the best, everyone. Farewell.